All right, good Monday morning. It is February 24th. It is time for MSTR Monday, where I have the most amazing guests in this space that understand strategy and the company, the playbook, what they're doing, and talking all different aspects about that. Lucky to be able to get the biggest, in my opinion, masterminds, financial masterminds, that are looking at that as an investment. It is earlier today because I am traveling. I'm sitting in the airport, found a quiet spot with a white screen behind me, or white screen, a white wall. So it's relatively neutral. Um, what more to say? Bitcoin price around 95,000, strategy around just below 300, I think. We'll check up on that. But welcome everyone, and especially welcome to you, Solei. How you doing this morning?
Can't beat it. I'm having
Awesome.
I'm having a great morning. Of course, strategy's down a little bit, but short term pricing action in my opinion, so nothing to worry about.
Oh yeah, for sure. And actually, that's one of the first things I want to talk to you about. Well, obviously, I've brought in the covered call selling expert that has, how many videos do you have on like selling covered
355, I
calls?
think,
Like,
something like that.
wow, 55 videos on selling covered calls. But I thought, why not just reach out to the expert and have him on and have him walk me through it, because it is something that I want to look into during this year. And I presume, Soleil, that covered call selling, that can be applied to any asset that have calls
Oh, sure.
um, associated with it.
Yeah, and usually
But
when
why
I do
don't
my streams, I have kind of like a vague idea of what I want to cover, or maybe just kind of like a rough outline. But for you, I actually took notes and I have a plan. So, you
wow.
know, I quit my job in December to do this full time. But for you, like today, I'm working for you, Anders. You're the boss.
See, this is why I like Soleil. He's one of the funniest guys in this space. I love it. And Well, yeah, totally. So let's do that. Can't wait. That's awesome. And you got the screen share ready and everything. But why don't we first just start off with so strategy right now lower than some people expected. They bought a lot of coins this morning. They got convertible bonds, raised a lot of funds that way last week. Put your thoughts on what is going on right now and what you expect to happen next, because I think a lot of us are in the same boat, but I'd love to hear like just your viewpoint on what's happening right now with strategy.
Yeah, it's crazy because it seems like the hardened Bitcoiners that understand that the number up go up technology isn't like every single day, right? It goes up and then it comes back down, but then for some reason they expect Sailor to just make the number go up and never go down, even though that's a completely unreasonable expectation. So it seems like I'm kind of coming full circle because before I saw Quant Bros 1, I just treated strategy like it was a leveraged Bitcoin play. So almost kind of like a any of the leveraged ETFs. It was just kind of like, okay, this is just Bitcoin on leverage. And then after I saw Quant Bros 1, I thought, holy crap, this is completely different. Like there's some unlimited upside that you could really miss out on with the covered call strategy that I was using. And so I got way more tentative about selling covered calls in basically every environment. Uh, because before that, I was pretty agnostic about what what stocks I traded, and really just had no favorites. I would sell covered calls on any stock in any environment, really, as long as the price was right. And started to get a little bit of cold feet about just selling too many covered calls on strategy, and I think that ended up being, playing itself out correctly in November. We had that big pump. And but along that while that was happening, due to the ATM, I think people have the wrong idea about the ATM, that it's not necessarily the ATM itself that is suppressing the price, but it is deleveraging the stock. So if an investor is treating it like a leveraged Bitcoin play, it's becoming deleveraged. So whatever kind of multiple you want to assign to what strategy should be, then that multiple is probably shrinking. Now the floor is increasing, so the amount that strategy should be able to trade down to should be increasing. So even though there's a ton of volatility, that volatility to the downside should have a higher floor. But what it looks like they're going to be doing now, and they're already started to announce new convertible bond issuances, is they're re-leveraging. So I'm bullish because if people are treating strategy like it's a 1.25x ETF or a 1.5x ETF or a 2x ETF, that multiple should begin to go up. And every time Bitcoin goes up, strategy should get an even bigger multiple against that. So, us having a correction from 500 a share down to 300, or it's sub 300s now, is totally in line with every stock, really. Last March, we went up from like pre-split numbers. It was like 500 a share, and it went to 2,000. So that was like a 4x in 5 weeks, and then it corrected down to 100, 125, somewhere around in there. And that's all to be completely expected. And so for the same thing to happen in November, for us to hit, you know, 500 a share again, and correct down only really to 50% so far, like it really wouldn't surprise. I think it really shouldn't surprise anyone if this would have already corrected to 200 a share or something. Like that's just reasonable for any stock, let alone one as volatile as this. So, we've kind of hitched our wagons to Bitcoin in a sense, and if if Bitcoin hits 70 or 80 again before it goes to 150, then people should have a very long term uh, view of strategy and not really be uh, expecting Sailor to be able to mastermind and manipulate the price up, up, up forever.
Yeah, well, great points, Soleil. I think also what we don't want to see that the price is only going in one direction. It'll take out the volatility, which is the product at which he can raise funds for buying Bitcoin at more favorable terms. It needs to swing up high and swing low hard. That's what we're seeing, and that's part of the product that makes it possible to sell convertible bonds at a higher premium. That did go down from 45% last time till 35% now this year. But it's all according to plan, right?
Yeah, and people who own shares probably are having a lot less heartburn because they may have a 5-year, 10-year window. But I know some people have been getting sucked in and lured into options trading. And when you have an option, you have an expiration date. So now it's like, I do understand the psychology of like, look, I need the number to go up by this date. So they're experiencing frustration in that sense. But if you listen to what strategy has been saying, is they are trying to accrete value for their common stock shareholders. That's a literal quote. So, you can't expect the people at strategy to be like, oh, let me pump up the price so that the people who have the 275 strike are in the money by Friday. Like they that's not a reasonable expectation. And so when you um when you buy an option and you give yourself an expiration date, you have to have your plan for when you're going to exit that trade at a profit. Because if you don't choose an exit, one will be chosen for you, and that will be the expiration date of the contract. So I think that's one thing that people have a little bit of a hard time with because and I experienced a bit of it myself as well. Like I didn't take nearly enough profits in November. I took some, I eliminated all my margin usage so that I don't have any, margin risk of getting liquidated or anything like that. But I really should have taken a lot more profits in November, but it's really easy to get sucked into that FOMO of, well, if it can get to 500, it can get to 1,000, right? So you have to have your plan when you open that option contract. You already have to have your plan about how you're going to exit that contract, and you have to list all of the possible scenarios. So a stock price can go up, a stock price can go sideways, a stock price can go down. And because of that expiration date and because of theta decay, which is the natural amount of value that an option is losing over time, there are multiple ways to lose money with options because the price of the stock can even go up, but if it doesn't go up enough to compensate for theta decay, then you can actually lose money on an option, even though you were directionally correct. You know, you were bullish and you were right, and the price went up 10%. But if it needed to go up 20% for you to make money on that option, you can still lose money. So you have to be very careful and you have to be very reasonable with your expectations. And none of what we're going to talk about is going to be financial advice, but good portfolio management advice is pretty reasonable in that whenever you take leverage, it should be in a small enough percentage of your portfolio to let you sleep well at night. And if you are, if you open up a contract and then you immediately go out to Twitter X or irresponsibly long and post, now what do I do? It's like, you were supposed to figure that out before you opened the contract, because once you're in it, you're just kind of like along for the ride at that point. And so anytime you take on leverage, you have to exercise caution.
Yeah, I couldn't agree more. And like most others that started dabbling into some level of trading, I have also learned my lesson the hard way and blown up an account at some stage.
Hmm.
And that way you learn. And I think it's a great advice. Not do something that does not make you sleep well at night. Be careful with greed taking over and destroying
Hmm.
you and your family's future. You said you sold in, you took profits in November, not nearly enough. I have a little bit of MSTU. I'm just putting this mine
Hmm.
Bitcoin back up and I just want to share with everyone that I, for some reason, can't write in the chat today. But I at least I can comment and
Mm,
put them up. I sold 20% of that MSTU that I bought at the end of September
nice.
in November, and put it into MSTR. And the rest I've been writing since, and it's down. Like looking at it today, it's down hard. But we're both in that situation. I think that we are bullish for the remainder of the quarter. Saylor started doing last week what he has promised, and it is to lever up. And I love that thing you touched upon, which I learned from listening to MSTR True North myself, that as the leverage goes up, and right now it is very low, even with the 2 billion last week, the MNAV is likely to expand, and if that goes from 2 to 3, just on putting on leverage, that's 50% up of the stock. But let's get back to you, Solei, and covered calls. I know. I'd love to, like, so me personally, I have a small Fidelity brokerage account.
Hmm.
I told you last week, we were chatting back and forth about the show here, that I personally want to sell covered call for those MSTU because I plan to get rid of all of those this year anyway. And but why don't you take us through the way that you want to take us through covered calls? I
Sure thing.
presume somewhere someone that wants to do that needs to look at what is the implied volatility, and it's something you want to sell when it is high. The implied volatility is just that premium that you can get when selling is higher. But let's get back to you and hear it from you, Soleil.
Exactly. And so you're going to be one type of potential option seller, and it sounds like you are looking for a favorable exit position. Like once MSTU pumps, Bitcoin pumps, strategy pumps, you're like, okay, I'm in profit and I want to exit this position, and on my way out, maybe collect some extra premium as I sell this thing off. Okay, cool. And so,
Yeah, maybe
yeah,
I
go ahead.
could try and describe a specific scenario that probably won't work out, but just so we can play along with that.
Mhm,
MSTU in November was at 31 and a half, and I think right now it's even below $7.
mhm.
But I gotta laugh a bit. So I expect MSTR and shout out to Denmark for watching. My good friend Bitcoin Dane there is in the chat because now is an earlier show than usual, so that's I guess Denmark can join. That's awesome. Should do more of those, and I will. Um, but I in an ideal scenario for me, this pump that we will see on Sailor leveraging up, Bitcoin also increasing, I expect. I hope to see that in March. Then I'd like to see MSTR a lot higher by the end of March, and then with compound interest on MSTU, even though it's right now below $7, let's say it gets to $30 by the end of March, and the implied volatility is high because now there's been a big pump, so the premium of those covered calls are higher. In that situation, I'd love to sell covered call for MSTU strike $60 1 month later, so at
Mhm.
the end of April, because even if those got called away, I'll be like, great, they're up, 9, 10x from where they were in February. But that's if that's completely unrealistic, but that's like a scenario I have in my mind now. Let's hear it from you.
Yeah, that could work if you are holding something that is a long-term type of hold, but from what I understand, and it's one of the reasons why I don't like the leveraged ETF products, is that they're not really meant to be a long-term hold, position. So, you know, how would that have worked out in November when it did get to,
Can you
MSTU
see
went to,
it got to 31 and a half? Can you see what the option prices were back then?
um if I owned one, I'm sure we could, but I'm not really sure, how to get to it. Um, but, you know, if you had sold $60 strikes in November, you would have been able to make a certain amount of money, but I doubt it would have been able to make up for the price of the stock collapsing 75%. Like, you'd have to make 75% returns on those covered calls in just a few months in order to make up from it going from 30 to 7 where it is now. So, I don't think, especially on a leveraged product, it's reasonable to expect, um, covered call strategy to really just make up for that. So, I don't really like that strategy. Um, it could work. I mean, if it goes to 30 and then it goes to 60, then you're good to go and you got your exit. But I would probably be way more aggressive than that. And, if you sell 50% of the money, you might be able to get like 1% return on capital or something at way out of the money at that point. But on a leveraged product, I mean, at the money where you have no upside whatsoever. So at $30, you might be able to get 10, 15% return on capital in a single week, but forgiving all of the upside. I would potentially think of doing something along those lines. Um, that way I get like at least a 50-50 chance of being forced to exit that position because with a leveraged ETF, I want to exit that position. I don't want to be holding something like that for the long term. And it let me just do this. Can I go ahead and
Makes
share
a
my screen?
Yes, I just want to say makes a ton of sense of what you're saying, and seeing it collapse from 31 and a half to 7, obviously. So it's instead of so it's the first time I own a leveraged product. It's
Mhm.
it's relatively small money. I'm having fun with it, and that's how you
Sure.
learn, and that's how I'm learning right now. But I can see something like that. Um, you want to just straight up sell it implied volatility is super high, or when the stock is up high. But
Yep.
all right.
Yeah, so, even strategy with its, it's crashing, right? It's big time today, right? Super, the world is the sky is falling, right? But it's still up 300% if we go back for a year. But what I wanted to look at is, so MSTU, is it a 2x leverage? Yeah, 2x leverage. So if I flip back and forth between the strategy chart and the MSTU chart, they've done a pretty good job of mimicking, the line graph looks almost identical. But the problem is that with strategy being down 5% year to date, MSTU is down 20% year to date. And so that's why this is not like a long-term hold. There's like natural decay built in there. And of course they got management fees and all of that good stuff. So this is something where you're supposed to get in and get out. But um I mean, even at these low prices, the covered calls for a week is probably going to fetch a pretty good amount of money. Like, if I bought shares today, it doesn't help you if you bought shares at $30. But if you bought shares today and you're paying, $6 a share, and you can turn around and sell a covered call for 40 bucks, that's what? That's like 7% return on capital. So even at these low IV prices, um, depending on what your goal is, this would still be even possible now. But with that caveat, I do think that this low implied vol environment is probably the worst time to start selling covered calls. If you're a novice and you're like, hey, I want to sell my first covered call, um, you know, if you only have if you have $100,000 portfolio and you only have 1 to 2 grand of MSTU, like, okay, that makes sense to play around with something like that and learn the ropes, but definitely not on like a sizable um, position. I think you would probably be disappointed selling covered calls into this environment. And so the first thing that I want to talk about is um, choosing or making sure that your goals align with covered call selling. So if your goal is to generate income, and I'm going to the notes now. If your goal is to generate income, 100% chance that covered calls will meet that goal, because every time you sell a covered call, you are paid a premium. So if you are not worried about missing out on upside, this can absolutely work in any environment. And even though I think opening up covered calls in this environment is suboptimal, if that's your only goal, then have at it. And there's a couple of option sellers that I've seen, have YouTube videos, and and that's all most of them care about. And they don't understand strategy. They don't understand Bitcoin. They're just TradFi guys, and they stumble across strategy and they see the high premiums, and they're like, they don't understand it. They don't care. It's just a premium collection process. And if their shares get called away, they literally don't care. They don't have an emotional attachment to their shares like I do, and like most strategy holders. So if that is your goal, is to just generate income, sure, have at it. Um, but your shares will will get called away, and so you have to be kind of prepared for that. The other reasons or potential goals for a covered call seller might be to improve your exit position. So let's just say that, and it could be MSTU. We can just stick with MSTU. So if your entry price is $7 a share, and you're like, you know what, I I want to exit this position, maybe like a 10-15% profit. And so I'll sell the $8 strike or something. And let's just go out to like 40 days. Um, there's two ways to get out of this if you own 100 shares. You could just set a limit order, right? And you could say, if the price gets to $8 a share, I want to sell them. And that limit order will be in force. But if it never gets to $8 a share, or if it takes 6 months to get to $8 a share, or 18 months to get to $8 a share, that limit order is just going to be sitting there. and you're kind of a slave to whatever the current price is. However, if you know you want to get out at 8 and you sell a $8 covered call for 40 days out, you can just get paid, $70, which is almost, like 10% return on that capital in, just 40 days. And let's imagine the same scenario that happens. Let's just say a year. It takes a year for the price to get to 8. Well, you can do this every 40 days and get paid $80 and then $80 and then $80 and $80. And then finally, when it gets to 8, it could go to 10 or 12 or 20. And trader A will have his limit order will fill at $8 a share, and he'll get paid his $800 and he'll make his 15%. But the person who sold a covered call will also get paid $800 for the 100 shares, but they will also get to keep all of the premium that they have sold, waiting for it to get to that point. So I think covered calls is kind of a no-brainer in that scenario. Um, as long as the price does eventually go up, because I used to trade anything and everything that had high volatility. And I don't know if you caught the news, but there was a company called Nikola that I think they filed for bankruptcy or something, and the founder was like found guilty of fraud and all kinds of crazy stuff. And so if you just hold on to a losing position forever, then there's no amount of covered call selling that's going to save you, right? So if strategy, goes to zero, the covered calls will like soften the blow a little bit, and you'll be able to collect some downside protection on the way down. But nothing can truly save a losing position. Um, but with all that being said, I think that selling covered calls is kind of a no-brainer way to improve an exit position, and that's kind of what you were describing. I just think that um, if it's something like a leveraged ETF, then I just want to be super aggressive, exiting that position, right? If this was the pump and we had just quadrupled in price or something, I mean, I'm just being super aggressive. I'm not selling 50% of the money. I want out of this thing. I want to collect like what is this, like 7% return on capital 1 week, and if it goes to $50 a share, that's fine. I'm just out of here. I'm going to take my ball and go home. Um, Let me see some other potential goals. Some people have are, and this is the main option seller's thesis, is that every time you sell a covered call, and it doesn't matter which strike you pick, but every time you sell this call, you can think of it as improving your cost basis. So if I did buy 100 shares of MSTU today for $640, and I immediately sell the $7 covered call, I've actually reduced my cost basis from 640 to 620. And so if all you want to do is reduce your cost basis, which, overall that gives you a greater chance of success, then that is also a reasonable goal for selling covered calls. A lot of people, and I think most people, want to outperform buy and hold. So someone who just, and I'm gonna look at strategy, because MSTU is not really a buy and hold instrument, but for
I do
someone
want
who
to
owns,
just,
yeah, go ahead, jump in
yeah,
there
just
anytime you
real,
want.
yeah, no, no, no. I mean, mainly we want to hear you, Solei, but just want to add that when I got into that MSGU position, so I'm a big believer in the 4-year cycle. It may
Hmm.
get either delayed or change, and maybe this time is different. But so I thought in 21. So also learned that lesson. It was something I got into for understanding, okay, there's going to be decay, but for the last 12 months of the bull run, plus minus, I'm okay with, like, there's decay, there's some other risks. Let it just, run its compound interest thing. As you said, it's down more than double of MSTR since New Year's, but I am expecting it to come back with a vengeance now that
Mhm.
we start going, but lessons are learned all the time. So yeah, back to you, but I
Oh,
do
yeah.
expect to be completely out of it once. So compare for me, what I was also thinking is compared to options. If I got into options and started selling those, timing, like, okay, we have a blow, like we are very high
Mhm.
in November and this implied volatility is high. But if I could just sit on the MSTU for 12 months, the tax is different, but probably not
Oh,
even
right.
worth it to not worth it to think, to optimize for that, I think. So I think I'll be back to calls in, just buying call options in the hopefully next
Mhm.
bear market. Hopefully a brutal bear market winter in 2026 where I can get some covered calls, not covered call, but just get some calls
Buy some
slash
calls, yeah.
leaves on MSTR when MNAV is compressed almost to one. By the way, I mean, if it happens, I can just hope because
Sure.
it would be ridiculously cheap. I while we're talking, I noticed that right now the MNAV on diluted shares on MSTR is only 1.75 or so.
Hmm.
It's like MSTR is ridiculously cheap right now. But enough of me. We want to hear it from you,
Yeah.
Solei.
Oh, yeah, it seems like a bargain. And for sure, I will be ignoring, tax implications, but that is a good point. When you own shares, sometimes people wanna stretch it out and hold them for a year to get the taxed on long term. Um, it does seem like, just regular strategy is better suited for that. But, yeah, you might be able to make it work. But it's definitely a risk. All that decay is definitely a risk. Um, so some people wanna just buy and perform, buy and hold. And it's gonna be pretty rough because over just the past year, you'd have to get more than a 300% return. So people who just bought shares and did nothing went from, $70 a share to 284. So that's gonna be a very tough, um, metric to beat. And so I think everyone's goal is different, and if you come in with the proper goal, and then if you say, "Oh, you know what? There is a covered call strategy that will help me meet that goal," then go for it. And your when your expectations are at least plausible, you'll probably have a better experience. And so let's go to the person who's going to be opportunistic and just wants to like get a little bit of frosting on the cake, right? So you're a holder and maybe you wanna trim some of that position. Well, I mean, I guess you could exit the entire position, uh, but there are some metrics that you can look at, and so,
Just let me know when you want to show.
oh,
Oh,
yeah,
you still wanted to?
yeah, yeah, still, I'm
Okay,
switching
I'll
over to
put you back
something
on.
else. Yeah, go for it. So Market Chameleon, and I'm not affiliated with anyone. I don't do ad reads or any of that stuff, but, Market Chameleon has a nice tool, and you can just create a little free account. And it's a visual graph of implied vol over time. And so you can see that this November, uh, this is MSTU's implied vol chart. It was cruising along at 200, bam, it hit 400. So something like this could be a uh, an, a handy sell signal. Like, okay, maybe I'll exit some of my position and take profits, or anytime a stock's implied vol chart looks like this. That's like prime option selling's time, and that should be reflected in the price. You can kind of ignore this. I mean, in November, I remember there was a lot of talk like holy crap, how come I can get, how come these options that are 50% of the money are so expensive? And that's just kind of like common sense, like when you see that happening, it's kind of just slaps you across the face. But you can look at a chart like this, and you can see that implied vol is through the roof. And oh boy, there we go. MSTR did the same thing in March, so this one's about to roll off the chart. But we had kind of like a baseline of like 90 30-day implied vol. Bam, it was 162, almost doubled. And then we kind of languished for a long period of time. and then bam, we hit November. So if you were kind of a sniper or you were just being very surgical with your covered call selling, you could have just sold covered calls in March and sold covered calls in November. And if you were, a long-term hodler, you could have skimmed a little bit off of the top doing something like that, and maybe just, a little bit of icing on the cake. The complete opposite of that scenario is someone who just wants to generate income, and those people are selling covered calls the whole way. And they're probably making a good bit of money as we trade horizontally. But those people who were selling covered calls on 18 November, they got completely wrecked. They missed out on all of that upside. So you have to be very careful that what you're doing aligns with your goals and your expectations. Um, let's see. And yeah, so everything is reflected in the price, but you can look at this. You can look at this implied vol chart, and Tasty Trade also has a metric called IV rank, and this is measuring. It's taking into account a year's worth of implied vol, and then it's ranking it from 0 to 100. So back in November, it was 226, then that would be basically at 100% because that was the highest implied vol for the year. And then, I don't know, this one over here that was down to like 70, that was probably like a 1 on the scale. So something like that when IV rank gets pegged to 70, 80, 90, or 100, or even over 100, those can be good sell signals as well. So there are definitely signs. Um, and you're a believer, right, Anders? You on mute?
Just unmuting myself. Because of the background noise, I am generally muted. But yeah, believer in MSTR.
No. A believer in God.
Oh, you absolutely. Um,
O-
life is good, God is good, and Jesus loves you. Yes, I am.
Okay, well then I got one. I got one for you. So, I
Okay,
got I got
let's
a
go.
little joke for you. So there's a guy, and the area is flooding, right? So he goes up onto the roof of his house, and some guys in a rowboat come by, and they're like, "Hey man, jump in the boat. We'll save you." And the guy's like, "Nah, I'm faithful, and God's gonna save me." And the guys are like, "All right, suit yourself." Hour later, the water's like up to the roof, and a speedboat comes by, and they're like, "Come on, get in, get in." And he's like, "Nope, I'm faithful. God's gonna save me. You guys go ahead." And I'm like, "All right." So now he's like standing at the top of the roof, and it's like up to his neck, and a helicopter comes by and lowers a ladder, and he's like, "You guys go ahead. God's gonna save me." And then of course he drowns. And when he gets to heaven, he's like, "God, what the heck? I was like your faithful servant. You didn't save me." And God's like, "What more do you want me to do? I sent you 2 boats and a helicopter." And so, there will be signs, right? So if the price goes up, if implied vol goes up, if Ivy rank goes up, I mean, all of these signs are slapping you in the face. That's when you have been thrown a life raft. You have to exit these leveraged positions. Um, if you so choose and you want to skim a little bit of icing off the top, you can choose those times to sell some implied vol. Um, it's not like rocket science, but it is very emotionally hard to deal with. Like I said, when this hit 500 a share, I just thought, you know what? It's the Omega candle. Bitcoin's going to 125, 150, and strategies going to 1,000 or 2,000 or whatever, right? So, um, you have to be ready for those moments and read the signs. You know what I mean?
Absolutely. And I love that analogy and also the joke and everything. Um, and now I will have to comment on it from a faith perspective, from my own
Yeah.
thinking. I've only been a Christian for 2 years, got baptized in the Pacific Ocean last year. That was the most amazing experience. Um, so, um, eh, s- which fits in perfect with your joke here is that, yes, God will hash your back, but he's also given us free will.
Mm-hmm.
free will on which to base if we will, choose to believe in Christ or not, and the rest of our lives. So, you know, I can't just go play on the freeway and say, well, God has my back. I'll get killed, and God will say, well, I gave you free will, so you made
And discernment.
a discernment, which means like you can think as well, or
Yeah,
like you
yeah.
can
You have to be able
logically
to,
deduce.
critical thinking, things like that. Yeah.
Right, yeah. And just last piece of note on that, I believe that the free will is proven by that quantum mechanic test
Mm,
where you see, I think it's protons it sends out, and if no
mm-hmm.
one is watching the experiment, it shows us probabilities of where it could go. But just from one person looking at it, instead of seeing it afterwards, but looking at it, one or another will happen. It will only go
Mm-hmm.
one place instead of a range of probabilities. To me, that proves that just our consciousness eh, choose something, and it's even hard for me to explain, but I think that proves free will. I spoke to Giacomo Succo, a friend of mine, an Italian Bitcoiner who's been around forever. He's a theoretical physicist, like
Mm,
super smart guy. I had the discussion with him, and he agreed that nothing is like what's going to happen for the rest of time is not predetermined. That quantum mechanic experiment kind of proves um, free will. But enough of that. Back to the just plain up covered calls. I like your joke though.
sure,
Thank you.
sure.
Appreciate it.
Yeah, you gotta, accept the signs that you're being shown, right? And so let's see. So if you can choose a goal that meets the strategy, then you actually have to implement it. And so you could be very strategic and open these things up. And you have to even you still are not gonna be able to probably time it perfectly, right? Because even if you were smart and you're like, "You know what? I'm waiting for the pump. I'm waiting for the pump," and you're holding from 125 to 255, and then you're like, "Whew, 350. Like, this is the perfect time to sell covered calls," and you sell, the 450 strike. I mean, you could still miss out a little bit, right? You still might miss the top. So there's no guarantee that even if you are a sniper, that you're gonna just knock it out of the park and hit it perfectly. So just be aware that you are accepting, profits today for a potential in the future, and it can go against you. Even being very safe with it, it's possible to miss the whole top. Um, but let's just say we were in the middle of a pump and we were gonna, you know, do our first covered call position. If you were very anxious to exit, you can be very aggressive and you can just sell, at the money. I think Josh Mandel, he was so temporarily kind of, bearish with the price that he was actually selling, out of the money covered calls, and or excuse me, in the money covered calls, which I have never done that. But he's a surgeon with these types of things, and eh, I'm, a little above my pay grade with some of that stuff. But even just selling at the money is very aggressive. This is sacrificing all upside. You get no upside if the price goes to 290, 300, 315, 350. You're sacrificing all of that upside to collect this, guaranteed premium upfront. Um, the Tasty Trade method of selling covered calls generally recommends, their research shows that theta acceleration increases and accelerates as we approach expiration date. And according to them, these out of the money options, right? Like if you did want to build in like, let's just do the 400 strike. That's maybe 30% call away value. Yeah. Something like this, the theta acceleration curve lasts for about 2 to 3 weeks. So if you sell something at 45 days to expiration, you could probably buy it back for 50% less than you got paid within 2 to 3 weeks. And so in this scenario, you could capture a bunch of upside, but you're going to have to accept way less premium. And so everything in life is a trade-off. Everything in the stock market and in the options market is also a trade-off. Do you want to collect more guaranteed premium up front, or do you want to build in more call-away value in case the price goes up? And both of them are valid strategies. I don't necessarily have a preference for one over the other. It's just align the reality with your expectations, and you'll be good to go.
A
But in
quick
this
question,
scenario,
Solei.
yeah, go ahead.
Because I hear you saying this and others as well. Let's say you sell covered calls at something a week out or a month, whatever, and then the price of the asset falls. So now those covered calls are way cheaper. You sometimes go in and just like close it and like book that profit, right? That you sold it for
Mhm.
$10. Now you're buying it back for $2 and you're out. The risk is gone, right?
Yep. And part of that is it's called trade management. And so let's just say we did sell these these 400 strikes at 39 days to expiration, and then the price is still trading where it is now. And now we're 2 weeks, 2 weeks has passed, right? So I'm going to go to the 25 days and go up to the 400 strikes. Now they're only worth 385. So I sold them for 665. I should be able to go in and buy them back for 385 and keep that close to $300 profit in my pocket. And at that point, you have one of several decisions to make. You can either pat yourself on the back and take the $300 profit, and then you can continue to just hold your just hodl your shares and wait for the price to go back up. And then you could sell another covered call again, or maybe not sell covered calls anymore until you like the environment. Or um, you could close this position and then roll back out to the 40 or 50 days again and collect another six or $700. And you can continue to rinse and repeat that for as long as the price stays under $400 a share. So, um, yes, you definitely want to manage this trade when it is no longer really makes any sense to continue holding it, right? Like if this $400 call had dropped down to just a dollar, are you going to hold it for 40 more days to wait for $1 to trade at? Like, no, it doesn't make any sense. That's not a good really use of your capital. So you would either close it and exit that position entirely, or if you are not necessarily bullish on the stock appreciating anytime soon, you can continue to just roll that out, every 2 to 3 weeks and collect, these little, just chipping away at these little profits every so often. So that is a decision that you have to make. Do you want to exit the covered call trade entirely, or continue to roll it out and keep collecting these smaller premiums? So that's a good point. Um,
Um,
yeah,
well,
go ahead.
yeah, thanks. And well, I'm just thinking back to what you said earlier in terms of since I am holding some of MSTU here, planning until early October. I can totally see that if we pump back up above 31, 40, 50, whatever, it's instead of selling covered calls on it, just like aggressively get out of those positions, and then I move all of it over to MSTR. Anyways, so that was
Oh, yeah, so
just
your plan was maybe to hold them through October. So in that sense, yeah, you might be able to, um, if we get another one of these, right? If we get another one of these big spikes in implied vol, yeah, you might be able to do exactly what you were were suggesting that you might do, is sell the 50% of the monies, and as long as you're okay with scalping some profits off the top, and then, maybe if the price does go to 60, but then it goes back down to 30, if you don't mind holding, and then maybe you get another pump in October, you might get 2 chances, 2 bites at the apple to sell covered calls in. Um, it could potentially work. I still when I have these leverage positions, when you get these gifts of, high implied volatility, I'm just gonna be super aggressive about exiting all of my leverage, in the future. I think I missed out on a golden opportunity in November. I probably took 10% of my positions off the table, and it probably should have been closer to 80 or 90%. You know what I mean? I just had so much FOMO, like, I didn't wanna miss out on it going to 750 a share, 1,000 a share, so I let that emotional, feeling kind of, screw up my trading ability. So, I really do feel for new options traders because, I've been doing this since May of 2020, and it's still hard to govern your emotions, when the price is just ripping or cratering like today, right? If you bought long calls in November, oh man, this is brutal because even just holding shares, you're down almost 50%. So leveraged positions are probably down 80% or more. So it is very difficult to stomach volatility to the downside when you've entered into a leveraged position.
Yeah, absolutely. So I'm glad that I followed the a rule that I made for myself when I opened this Fidelity account where I have
Mhm.
MSTR and MSTU, and said MSTU is not allowed to go above a certain percentage. So anytime it went above that,
Oh,
just like discipline sold every time. If it had one share, two share, half a share, like always sold to keep it below that percentage, which meant I sold 20% of it back in October, but I guess mainly November, moved it over
mhm.
to MSTR. Even though MSTR is down, then the ratio between the two, of course, was way more favorable back then.
That's a great
So
strategy because it's really it's just rebalancing. You know what I mean? Um, if you take the typical 60/40 portfolio from, our parents and grandparents' day, right? 60% equities and 40% bonds, you're gonna rebalance. And so if your stocks would go up to 80% of your portfolio, then you'd have to sell them and buy some bonds. So that's exactly what you're doing. I guess it's kind of a pairs trade because MSTU and MSTR are correlated, but one is magnified of the other. So, yeah, that's a great way to do it because one is going to become overvalued in that account, and then you just rebalance it back to, I don't know if it was, I don't, whatever percentage you chose, could be 50/50, 60/40, 80/20, whatever your rebalancing is. That makes total sense. I love that strategy.
whoever is doing the video editing, what's his name? J64. What's
Yeah,
his account? Yeah,
Justin.
I want him to Justin. So I want him to take that piece where I say my strategy, and you go, "Oh, that's a great strategy. Like
Yeah,
I need that." Like Nitho Solei, the great
Chef's
Solei.
kiss.
He said it was okay. Yeah. So I'll cherish that. Thank you.
Heck yeah. Um, Yeah, so that's the easy part though, what I just described, right? So the price can either go down or sideways and, selling it and then buying it back for less, selling it and buying it back for less. That's the easy part. And the way that Tasty Trade describes that is it's called rolling the untested side. And when you set this covered call strike, let's just do a 350. If the price goes sideways or down, this strike is not being tested. The price of strategy is not going up towards 350, and you can just continue to do that strategy forever. You can just keep rolling and rolling and rolling and rolling, and you're going to be collecting little, premiums here and there. The difficult part, and new option sellers will run into this very quickly, is once this becomes tested, meaning the price was 280 when you sold it, and now the price of strategy goes up to 300 or 325 or 345, and now you sold it for 11 and it's like 2,500 to buy it back. And you're like, "Oh no." And then you just panic, right? Um, if you sold this now and the price of strategy went back up to 300 quickly, the new option sellers are going to panic immediately, and they're like, okay, I sold it for 11 and now I bought it back for 2,000. Like, okay, well, you just lost $900, right? And then, of course, since the market loves to inflict maximum pain on people, then the price would probably just crash right back down to 280 again. And then you're like, ugh, I could have just done nothing and not lost that $900. And that's called getting whipsawed. And so you'll sell, and then when your strike is threatened, then you'll roll up and out to avoid your calls getting called away, and then the price will go back down, and then you lose money on that. So you have to be very disciplined in your approach and know what you're going to do. And in general, unless I want to exit this position completely, I generally do nothing when my strikes are threatened. So if I sold this 40 days and the price runs up to 325, I just sit on my hands and I wait for, a day or two before expiration. And the reason is because if I roll it now, if I pay to roll it now because I'm so scared that I'm going to lose my shares, then I'm going to pay for all of the extrinsic value, all of the value that would erode from this contract over the next 39 days due to theta decay. I have to pay for all of that now, and I don't want to do that. And so the way that you in an out of the money option, it's all extrinsic value. Okay. If it goes in the money, then you have to subtract the intrinsic value, and whatever's left over is the extrinsic value. But in general, I've only been exercised on the day before expiration, like once or twice, as long as I've been doing this. So while the buyer can exercise the contract at any time, they would be foolish to do so with 30 or 40 days left, because they would be throwing this $1,000 away. If they, so I think people just get a little bit too scared that their shares will be called away. Now, the last time my shares got called away, though, I didn't address it until like 2 p.m. on a Friday, and it starts happening, right? If you don't get it done like Thursday before expiration or like Friday morning at the latest, you could lose your shares. So I don't want to say that it never happens, but 30 or 40 days out, it's pretty rare. So I think
Just
that's
going
one
back.
thing. Yeah, go ahead.
Look, I thought you had a
You're
break.
muted.
Please finish. No, I'm not. I should be fine now, right?
Yeah, you're good. I can
Can you
hear
hear
you.
me? Yeah. No. So I thought you were done. That's otherwise I wouldn't interrupt. But since now anyway we had a break with the mute and everything. Then no, I was just wondering before when you said when you didn't panic and buy them back way more expensive. Is that why in trading school they called you Iceman or?
Yeah, exactly. It's you got to have a little bit of ice with the fire, right? Solei means sun, so um
There you go.
yeah, so yeah, you have to be comfortable with just seeing that price go up. And if you do wait to the last minute to roll, at least the only thing that you have to roll is the intrinsic value if it goes in the money, and you're not paying for all of that extrinsic value. The whole point of selling the covered call in the first place is to collect the extrinsic value. So if you're if you're saying, well, I'm going to sell it to collect extrinsic value, but then I'm going to panic roll it, and you're basically buying the extrinsic value. So that just kind of doesn't make any sense to me. But it's definitely the hardest aspect of the trade. When the price goes sideways or the price goes down, and you can just pat yourself on the back for being the smartest covered call seller in history. That's the easy part. But when your strikes are threatened, or as Tasty Trade says, that when your strikes are tested, that's kind of like trial by fire, really. And I think in general, in that scenario, doing nothing is the right way to go, unless you've had it on for 2 to 3 weeks and you can just roll it out for a profit. If you're rolling out for a debit, meaning you owe money, I think that's generally a bad idea. But if you can roll out for a credit, that's fine. That seems reasonable, because the whole goal is to get paid money, not to not to it's not to buy high and sell low, right? That's the opposite of what you're supposed to be doing here.
Quick question, Soleil. You
Mhm.
mentioned earlier in the show the website you use to see the implied volatility, and where someone like me could look at MSTU or any other asset and see what the implied volatility is, knowing that it's usually good to sell when it's high. You get more of a premium on the calls that you're selling. So what was that called? And you can just have a free account there, or
Yeah, it's marketchameleon.com.
okay.
And oh, you can't put anything in the chat either right now, right? Yeah, we'll put it in the
No, I
comments.
could actually. So that did come up. Obviously, you bring something like that up, and then 2 minutes after, I could post in the twat, not not in the twat, in the chat. So if you want me to put something in the chat,
I put it in the
okay,
private chat.
okay, and do you want me to put that in the public
Yeah, sure.
chat? Okay, so let me see if I can uh get all of that. So I'm sitting in an airport, don't have my regular mouse. I'm using I think that works. Boom, there it is. Now put it on the screen. Um, so yeah, that gets all of it, right? So marketchameleon.com/overy/MSTR/IV. So instead of MSTR, you could put any other stock, or
Oh yeah,
not stock,
exactly.
ticker symbol. Yeah.
Yep.
Nice.
I'm going to give you one more to put in there as well. So this is another handy tool, options profit calculator.
You,
And
you
so,
you saw that. Okay, yeah, go ahead.
yep. And so you can go in here and you can go to the covered call scenario, and you can just put in your ticker, and you
I
can, yep, go ahead.
No, I was gonna say, I love how you saw how I was struggling with copy pasting it without a mouse from the private chat to the public chat. It's like, oh, I got more for you. Put
That's
this one
right.
as well, Anders. Let's go. Okay. So what does this one do?
Yeah, so you can actually put in you can put in your long calls, you can put in, credit spreads, you can put in pretty much whatever you want. And let's do a covered call for April and like the 375 strike. And you can just calculate it. And you can see here that anywhere in green, so any of these prices of, basically 292 or higher is all green throughout the entire life of the contract. And of course, if strategy's price goes down, then your overall trade will go, down. You're going to lose some money. But you can see here that you get diminishing returns once the price of strategy exceeds your strike price. Actually, it only went to what did I pick? The 375 call. So let me adjust this and make it go all the way up to like $1,000 a share. This is like really losing the maximum upside. And so you can see that this perfectly illustrates what limited upside looks like. So, as long as the price stays under 375, you are capturing all of the upside in strategy, right? You're making tons of money. You're in the green. But you can see that as the price goes up and up and up, if you miss out on maximum upside, once it gets to like 750 a share, your maximum profit just pegs at $10,000, and that's all you get. Because the only thing that you're going to be able to profit is between the current price, which is about 275, and your strike price, which is 375. So your max profit is going to be this 10 grand. And it doesn't matter if strategy goes to 1,500 or $1,000,000 a share. Your profit is capped out at this 10,000 bucks. So, I mean, that's not horrible. That's good returns for, a month and a half, but it's not the lottery ticket returns, right? Whoever bought this call from you, he's the one that won the lottery in this scenario. So yeah,
But
again, it's just all about trade-offs and aligning your expectations.
gotcha. And by the way, so I'm sitting in an airport. I guess for a reason, there's a flight I have to
Oh
catch
yeah.
at
When
some
do we got to
stage.
cut this
But
short?
I don't know, like 5 minutes or so,
Okay.
something like that. But I'm loving this so much. And oh, so another note, I'm planning actually to start doing more MSTR on Mondays, and I love doing it not on a Monday, just to why always follow the name and the rules, right? Actually, the show was launched on a Tuesday, because why not? It doesn't matter. I'm planning to do more of these. So apart from I do want to have the regular MSG on Mondays, which today is an early compared to usual, but I'm looking forward to do some throughout the week. So I'd love to have you back on, Soleil, every now and again. And it can be any time that suits you throughout the week. And we can talk about all these topics. But back to you.
Yeah, no, I just while you were saying that, I just double checked my notes. We have basically covered everything. Like there's maybe like one or two little tiny things that we didn't cover that we probably shouldn't get into anyway. I will say a quick note. So covered call selling is like the gateway drug into doing other things with the options, and selling covered calls I think is kind of like, and it's kind of like training wheels because you can lose a ton of money if you're buying options, right? You can just lose it all basically. I think selling covered calls is much more safe. Is that you actually have some downside protection that just hodling shares doesn't have. But once you start selling covered calls and then you realize that you can do a poor man's covered call instead of buying 100 shares, you can buy leaps and sell covered calls against those. I think people get a little bit too greedy. I still do a certain amount of it, but in a bear market, poor man's covered calls will actually absolutely just it's just catastrophic to your portfolio. They just, you know, those leaps go down 75% and there's no amount of covered call selling that's going to keep up. Um, so I would say just be careful with the poor man's covered calls. If you are making money with the covered calls and think, okay, I can just make even more money with these other things, that may or may not be the case. And so the last thing that I'll leave you with is if you want to look at the essential Greeks, you're going to want to understand delta, gamma, theta, and vega, and that'll get you headed in the right direction if you're a noob and want to get started.
Nice. Thank you so much, Soleil. Also, I just want to, so should I remove the screen share now or?
Oh yeah, yeah, you can stop screen share.
Yeah. Okay.
We can call it.
Yeah. I'm going to Vegas in May for the Bitcoin Magazine conference. I have, as this one indicates, events by others. I've organized four pleb parties, Bitcoin pleb parties before. Not doing anything for Vegas for various reasons, but I am within the last week or two starting to make plans actually for doing something later in the year for another event. So more on that. And people who sign up to the newsletter, the email on my website will be the ones receiving the email with the cheapest tickets. Like the cheapest tickets will be the ones available first, of course. So just a note on that. So looking forward to doing something again, and it will be related to something also my in this particular space, which will be fun and games. But yeah, Soleil, thank you so much for coming on and giving us those useful tools and also um, insights and comments. And love to see where I'm wrong, so I can learn from that myself. And definitely, there's something that I'll be changing going forward. And this may very well be the last cycle or the last year ever that I hold something like MSTU.
Hmm.
Right now, I'm going to try and truck on through until October when I've had them for 1 year, which I think will be around the most likely top. What's your own thoughts on? Because I know a lot of the guys from MSTR True North are expecting, or I've at least heard two people say expecting more a prolonged bull market because of the types of buying that is happening now and potentially US, etc. And I've been there before thinking, yeah, like now all the right buyers are here, it's gonna happen, and just it doesn't, and it goes clockwork on that cycle. But it will probably be different the time that I don't expect it to be different. That's the market's way of loving you, smacking you in the face. What's your thoughts on that?
Well, my guy Tim Kotzman has been calling for 1 million in 2025, and I thought he was out of his mind. Like he's hearing people say you're not bullish enough, and he's like, "Hold my beer, yes I am." And but I just saw Samson Mao get interviewed within the last couple of days, and he's calling for $1 million in 2025 as well. So he's definitely got good company with Samson calling for $1 million. And yeah, Bitcoin just loves to do what people think it won't do. So, it'll either underperform or overperform. And that's kind of one thing that an option seller doesn't do is bank on it doing something. So you're kind of like saying, well, if it goes up, great. And if it goes down, at least I'm going to soften my downside a little bit. And so, yeah, I don't know if it's going to go to 150 or 450 or $1 million, but I will be, looking for opportunities to maximize. And I'm just going to take what the market gives me. If we get a super cycle, great. And if we don't, that's, it's kind of all right too.
Yeah, I'm trying to put myself up in well, I guess I don't know if it's something I'm trying to do, but looking at it right now, definitely dumping all my MSTU. I want to hang on to the MSTR. I want to hang on also to the little bit of Bitcoin that I have. Then either, well, I'm hoping for a bear market next year. I hope the 4-year cycle is intact, because then I can buy leaps, which is the long dated covered calls. Not wrong. Leaps, but long dated call options on
Exactly.
MSTR when the price is really compressed in a bear market. I would love to have the opportunity to throw money at
Same.
ridiculously cheap call options, but if I don't get that, what I really want, the alternative is that all my assets are just going to go up a lot because it's
Yeah.
super cycling. It's like, okay, that's not the end of the world, right? Bitcoin goes to 5 million. Okay, I guess I have to deal with that.
Yeah. The worst case scenario is still pretty good.
Yeah, so that's not a bad situation to be in. So if nothing else, it's just so exciting to watch and be part of this and see how this plays out, and speculate on it, and we have conversations on it.
Yeah. I'm guessing, as long as we get one more Bitcoin rally. And we had a similar 4x movement in November that we had to last March, and that was even with them delevering with the ATM, with selling at the ATM and delevering, we still got that 4x move. So, like, what can happen if we get another Bitcoin rally, and instead of delevering with the ATM, we're continuing to lever up with the convertible bonds? Like, it it could be pretty impressive and catch a lot of people off guard. So my long-term
You
thesis
know,
has not changed at all.
I totally agree. What annoys me is it used to be every time I did a stream that the two thumbs up would give fireworks, but
Yeah,
the
Tim can
fireworks
get
is
it to work and
gone.
I can't. I don't know.
I think he was
Drives me
on the
nuts.
show and he took it over. He stole my fireworks. Oh, by the way, that's a great show to watch as well. Tim Kotzman, the
Oh yeah.
BTC Treasuries podcast, and I should probably run and catch my flight. But Solei, thank you so
Yes,
much,
sir.
and I hope you have time and will to come back on and do some random MSTR calls, whatever, talk and
My
have
pleasure.
fun.
Hope to get to meet you in person someday.
Me too. Well, we'll do that this year. We have to. We have to do that this year for sure. All
All
right.
right. See
So,
ya.
see you. Thank you very much, Soleil, and thank you everyone for watching and participating in the chat. If you, this is not financial advice. It's purely entertainment. If you like the entertainment, feel free to hit like and subscribe and share with someone who think might find it worthwhile as well. See you in the next one. Cheers. Bye.
See ya.